Hello traders and welcome to another video review. Today is Monday, August 10th, 2026. Let's take a look at the economic calendar for today. No high important data release during the Monday, so actually we got only few of the medium important data releases over the day, and none of this is quite important and might not cause any market volatility. Adjusted current account in Japan shrinks to 1.4 trillion yen. Current account is, as you can see, minus 0.92 trillion yen. CPI in Denmark 1.7%, and at the in the middle of the day we got the data from the Brazilian market readout. So basically non-event Monday ahead of us. So without any further ado, let's switch to the charts and we start with euro dollar. So the euro dollar 4-hour time frame chart is showing us a breakout. The yesterday high was took off. 1.1560 is now a temporary technical support. Apparently it's not quite sure if we should change this level here for the different color or not. Let's leave it like it is right now, because we have quite significant pullback, like 50% from the highs of 1.1581, so like 31 pips the breakout to the upside, and now we back a little bit lower towards 1.1550. Right now we are above that yellow channel. We are trading around 1.1550. As you can see, this is kind of an interesting breakout to the upside. In case of the extension to the upside, the next target would be somewhere around 1.16, I guess, 1.1622. That's the next target, and eventually the other one might be 1.1645. So this is how it looks like right now, and definitely in that situation we will be above the current technical level and local technical support, and definitely will be out of the channel for good. So interesting situation on the euro dollar. How is the pound doing? Not that well. We got the breakout to the upside, and nevertheless the technical resistance at 1.3507 is still holding the further advance to the upside towards eventually 1.3557. Momentum is quite strong. On a 4-hour time frame chart we got 63 points. So the bulls are still in charge of this market, and it looks like this market wants to move higher. So please keep an eye on the swing high from the last week. No, this is the swing high from like 2 weeks ago at least. It might be tested or even broken soon. Japanese yen, another very sharp decline towards 157.69, and a nice rebound to the upside with the momentum breaking the level of 50 right now, almost 54 points. Nevertheless, we still need to break above 158.60 in order to cover this ground here, this territory towards 160 and above. So the question remains whether we are going to repeat this kind of the behavior that we've seen already after the big intervention of the Bank of Japan. Will we ever see this kind of the situation? We will still find out. Gold, and gold is moving higher. Right now we are testing the 4,360 technical resistance as planned, right? We expected this movement to the upside towards the blue arrow last week, and yet we have it. Technical resistance, major technical resistance is now being tested, very, very close to the upper channel line. This is the descending channel line, right? So right now we are up even more than 9%. We're even like 10% higher from the lows of the wave Y at 3,943, with a very strong momentum right now, hitting the extremely overbought conditions yet again. Nevertheless, if gold starts rallying, we will see the levels above 4,700 quite soon. The question is whether this technical resistance will be violated strongly or not. Right, for now it looks more and more like a beginning of some kind of deeper retracement to the upside, or even the beginning of the upside trend. Please remember why we speak about it. We speak about it because in the background we have, of course, all-time high 5,597, movement to the downside, wave W, complex corrective structure, almost 20% advance in the wave X as a connector, and then we got this movement to the downside inside of this nice descending channel towards the new low 3,943, and that's about the wave Y. So right now we should see some sort of the impulsive development to the upside if this is really the low for the wave Y. Why if? Because we might see another connector like the wave X here. Look, 20% was the previous wave X. This is not 20% yet. This is like 10% movement to the upside. So it's still like, it's still a possibility that this is only the wave X as the second connector. The other thing is, it doesn't actually look like impulsive. This one looks more impulsive than the newest pullback to the upside. So stay focused, stay vigilant. We still have some room to the upside from the 65 to 70 before we will hit the extremely overbought conditions. Nevertheless, it might be seen as last leg to the upside. So it might be impulsive wave to the upside, but not necessarily the beginning of the new trend to the upside. Okay, so that might be just the last leg to the upside and the bull trap. All right, so please stay focused, stay vigilant. It's not, the movement to the upside on gold is not yet confirmed. S&P 500 after the pullback towards the level of 7,699.97 is still trying to move higher. These days we are trading closer to the swing high from the last week, 7,793. With strong momentum hitting the extremely overbought conditions, we are looking for a breakout to the upside on the S&P 500. As long as we trade above this zone here, roughly above 7,576.86, the outlook remains bullish, and there is, of course, uncharted territory on the upside. I guess 8,000 points are possible soon. Crude oil, after the nice movement towards the 73.63 technical support, we got stuck inside the very narrow range. Basically, 78.45 is the upper range level, and the technical resistance 76.74 is the technical support, local technical support. As you can see, we are oscillating around the level of 50. Neither bulls nor bears are in charge of this market, as it still looks very, very susceptible for a further movement to the downside. Can we apply trend line here? Let me take a look. What do we have here? Oh, something like this. Anyone? Trend line, anyone? There you go. Okay, let's make it, of course, let's make it orange and thicker. So we got this trend line, and to be honest, here with the trend line, it's still possible that we have a test of the trend line and then movement to the downside, which means the market is highly technical and not that much macro focused. Nevertheless, if there is a breakout above the trend line, that's the first indication that possible gap fill is on the way. And last but not least, the Bitcoin. The Bitcoin nicely broken above this golden trend line on 4-hour time frame chart during the, well, rather nice strong momentum. We pulled back a little bit to test the breakout, test the trend line, and now we are facing the technical resistance located roughly at 75,622. Any breakout above this level is bullish, and we might even took off the July 21st swing high, and then even go higher towards 67,284. So please stay focused, stay vigilant. It looks like with this kind of the momentum, we might see movement on the Bitcoin quite higher this week. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.